Hey everybody, welcome back to Inventory Watch. It is the last week of the year, December 31st, so Happy New Year to everybody. We're going to go into how Phoenix housing fared in 2023 and what we might see in 2024. So let's get into it. Let me go ahead and present this present in full screen. Here we go. So let's go ahead and shrink my head a little bit here. And we'll move this off to the side. So let's start by looking at total new listings that hit the market this month. So since I've got data, today's the 31st, so I only went to yesterday since this day isn't over yet. So we are up 5% in new listings this month compared to this month last year, which is great because we need inventory so much. To put that into perspective, where we ended 2023 compared to last year for 2022, we had 116,800 new homes that hit the market last year in 2022. And this year we had less than 100,000. We had 91,155. So total inventory this year, like brand new inventory hitting the market, was actually down 22% this year, which is crazy insane. To see lower inventory again, like another year of increasingly lower inventory. But the way that the last couple months of the year has been trending, inventory has actually been going up, as you can see, we're up another 5% in December. So as long as we continue to trend and kind of beat out the month from last year, hopefully we'll have more inventory going into 2024, reducing some of that affordability issues that we're seeing. So the number to beat for January is 7,932. So hopefully if you watch Inventory Watch with me, we'll be keeping track where we were kind of week over week and seeing if we're going to hit these numbers for January. That is really going to help us bring affordability back to our market here in Phoenix if we start seeing this inventory increase. But if we have another year like 2023 where we see another decrease in inventory, you guys are just, I don't have any words for that. And I hope we don't see that. I hope we start to see this market balance out. So let's go into total active inventory, where we are today. How much inventory is on the market? We have 14,825 homes on the market, which is down another 1.3% from last week. But it is the end of the year. And so we do kind of see inventory kind of wane off at the end of the year. But to put this into perspective, last year we had about 20,000 homes on the market when we were entering 2023. This year we only have 14,000 homes entering 2024. So it is down year over year as well with the total active inventory that we have. The one thing that I am seeing is that the average list price is decreasing. So 585,000 this week is the average list price. I believe we started the year average list price around 630 something, 600 and something. Last week, average list price was at 612 and we're down 585,000 this week. So the last week of the month is always weaker. So that's kind of why we're seeing these lower numbers. But let's go into pendings, because this is kind of where I'm seeing the most in the softening of the numbers. And so we had a 17% decrease in weekly pendings week over week. But again, that is to be expected because it is the week that we had Christmas was this week, December 25th, as well as New Year's is today, and tomorrow's New Year's Day. So we tend to see pendings and people out there buying houses fall off a cliff the last week of the year, and that's totally fine. However, what is not totally fine is the pending ratio that I keep track of. So the pending ratio is down at the bottom here. You can see that last week we were at 37% and we had a huge drop to 34% in the pending ratio, which puts us more stronger into a buyer's market. And the reason why this is so concerning is that we had huge decreases in interest rates and we didn't see a huge spur in buyer demand or closings happen. And so if we don't start seeing that for January, that's what's going to put us into increasing inventory and lower demand. So even though, let me see if I have this here, on this slide here, we have the interest rates where we were last year in 2022. We were at 6.8% and rates were rising going into the sevens. This year we're at 6.2%, and rates are decreasing going, closer into the five. So, but the problem is that we are seeing less going under contract and less sold homes than we did the year before when the rates were actually higher. So that is what's concerning to me, is that we have lower rate cuts, but we aren't seeing the buyer demand coming back. So it's really something that we need to watch moving forward. And if we look at the number of sold homes this year compared to last year, obviously we've seen a downturn in buyer demand. Rates were really high. So it was expected to see the sold numbers go down, and we did go down 15% year over year, but we did see inventory go down 22% year over year. So it's like they're both going down in double digits, causing like this weird, like, it's not a buyer's market, it's not a seller's market. But the more and more we go each month, we are getting closer to these buyers markets. With that pending ratio back to like 34%, the closer we get to 30%, the more of a buyer's market that we're in. The closer we get to 40 and above, the more of a seller's market we were in. So that pending ratio that I showed you on that last slide is that we were at 34%. And the buyer demand has just fallen off cliff. And yes, it's December. We had holidays, we had Thanksgiving, we had Christmas, we have New Year's, all bunched into one. And so what is going to happen in January is going to be really pivotal to what we see. So if we continue to see buyer demand go down in January, that's going to be an early sign for us that the spring market is not going to be as strong as it was last year. And to give you an idea of the spring market that we had last year, we went into 2023 with about 20,000 listings, and we were at an average price of $516,000, and we had such a strong spring market, in January and February, March, April, that prices actually went up from $516,000 to $570,000. We had a huge increase in pricing because we had more buyer demand than we did inventory. Just remember, we had 22% less inventory this year, and it really showed up. And this is the reason why home prices went up again, is because we are in an inventory constrained market. The sellers didn't come to the table. However, I am concerned about that. And the reason why I'm concerned that we are going into a weaker market is because yes, we do have, I'm going to show you guys this. We do have less inventory. We also have less buyer demand. And I think we're going to see continued lowered buyer demand, even though prices are starting to interest rates are starting to decrease. And the reason why is, I want to show you this graph here. These are from the New York Fed. Okay. I'm on their website right now, and I was looking at, the one thing I've been keeping track of, I don't have my mouse, so this is going to be a little bit crazy. The one thing I've been keeping track of is the total debt. And so you can see this is household debt and credit developments as of Q3 2024. The Q4 numbers haven't come out yet, but you can see like household debt has just been rising year over year at crazy numbers. And this is in the billions. So total year over year change into Q3 was $786 billion increase from last year. Consumers have spent almost $1 trillion in 1 year. And that you can see as mortgage debt, that's going to be the bulk of it because those are the largest purchases. Home equity lines of credit, student debt, auto, you can see that actually, no, that still came up. Auto debt, like dramatically year over year, $71 billion. Credit card debt, $154 billion in credit card debt from last year. And this is the number that's most concerning to me, is that we are this is the total number. So year over year, we spent another 154 billion, but we are, as a society, $1 trillion in credit card debt floating around out there, which brings our total debt service to $17 trillion. And to me, this is just wild. And so the fact that we have so much, that we're just such a debt-driven society, these numbers are huge. And looking at the flow into serious delinquency, 90 days or more, that is just starting to rise. So Q3 2022, we had 3.6% of delinquencies, and now we've almost doubled that, like going into this year. So in just 1 year, we've doubled our 90-day or more delinquents on credit cards. So I think that we need to be careful about like, oh, well, interest rates are going to go down and the buyers are just going to come back. And guess what, guys? I don't know if the buyers are going to qualify in mass, because I think that like the mentality of what I from what I'm seeing, in forums and what people are saying out there, and what people's habits have been, is like, oh, I'm never going to afford a home. And so they just went on vacation and went to Hawaii or Disneyland, or took, extravagant like vacations and just put them on their credit card, instead of being able to think that they would be able to save to ever afford a home, that they're just like spending money. And so I think we have to be careful with that narrative of just saying, oh, the buyers are going to start running back to the market as soon as rates fall. Because you know what, guys, rates have been down for the past 30 to 40 days. We've seen like the rates like coming down, and the buyers haven't returned to the market. And it could be that it's the holidays. It could be any number of that reasonings. But if we don't see the buyers starting to come back with these lower rates after the holidays going into January and February, if we don't see the market start to spur, then 2024 is probably going to start off very, very slow. And I think we just have to keep an eye on that, because I am not confident enough into what I'm seeing with the other economic factors that the buyers are just going to start running back to the market just because interest rates are low. So something to keep in mind, something to think about. Let's kind of go into, so that's where we ended, I think, with sold homes. That's kind of the narrative for ending out the home sales for the Phoenix Metro. Now let's take a look at rentals, because rentals are important in looking at all of this numbers. I keep going backwards. Okay, so new rental listings are actually down 11% in December. So December 2022, we had nearly 3,000, almost 3,000 rentals hitting the market. And this, we're just scratched 2,400 this year. So we're down 11%. However, that is the end of the year. Like for the whole year of 2023, we're actually up 9% in inventory for the whole year. So new rentals in 2022, we were at 34,500. And for 2023, we're at 37,700. And that is the total new inventory this year. So we did see inventory increase this year. And then going into pendings, I had a couple because I missed a couple weeks, but total applications in currently is 575, which has remained stable. We didn't see that big drop at the end of the year like we did for housing pendings. So I think what's most interesting is just tracking where we are for rental inventory, because what's interesting is that inventory actually went up, and we saw that 9% increase in rental inventory, and we're seeing, let me see, and we actually did see an 11% increase also in closed inventory. So not only did rental supply go up, but so did rental demand this year. And that's probably because we were 15% of the people that didn't buy in the housing market moved over to rent in the rental market, right? So we saw the decrease in the people purchasing, and it's showing up in our rental numbers as rental demand has gone up. And so inventory went up, rental demand has gone up. But what I think is most interesting is that rental prices actually are on the decline going into the end of the year. So as you can see here, we started 2023 with an average rent of $2,300, and we maxed out in the middle of the year after like the spring and the spring movement at $2,400 average rent. And we saw the average closed. We started the year with 2,100 closed rentals. We peaked at an average of 2,300 closed rentals, and boy, did demand fall by December to 2,000. And so did the pricing fall lower than what we started the year. So we started the year with a 2,300 average closed price on rentals, and we're ending the year at 2,255, so $50 less than what we actually started the year with, which is wild because what you see is you have an increase in demand. We also saw an increase in supply, but an 11% increase in demand should say, oh, well, prices should be going up, which we did see at the first half of the year. Prices did go up about $112 for the rentals, but they've come down since then, almost $200. So what we're seeing is days on market increasing, and the longer rentals sit on the market, the owners are going to start doing price reductions. So what we saw from here is we saw this big spur of demand in the spring, and rentals were kind of flying off the shelves, and they were renting in under 30 days. And so what happened after the summer was rentals started taking longer to rent. And so they're taking 45, 60 days to rent, which is why we're seeing those price reductions come down, is that they're actually sitting on the market. And then once they hit a certain price, then the renters are seeing oh, that's affordable, I can rent this one. And then they're putting in their applications. And so I don't know how the rental market is going to play out, because if the buyers are truly putting themselves in an unfair advantage of having too much credit card debt and they're not going to be able to purchase a home, they're going to be looking to rent. And are we going to get another increase in rentals coming to the market? So it's all going to be dependent on supply and demand for the rental market of are we going to get more rentals hitting the market this year? Or are we going to have supply constraint there as well? Buyers aren't buying, and we start seeing people move to rentals. So I'm having a little bit of audio problems, so I hope that didn't mess that up too much. But so that's where we are in 2020. That's where we're ending the year here, 2023, going into 2024. Buyers, I'm not sure if they're going to be able to come back to the market and afford just because interest rates are down. I think there is more economic things coming into play going into 2024. Now, the market still will be fairly strong because we're so inventory constrained. The rental market, we did see an increase in renters. I think we're going to continue to see an increase in renters, but prices cannot balloon as much as they have to keep these renters coming to play. Affordability is still huge. Inflation, even though they say inflation is coming down, things are still very expensive when you go to the store. You go, fast food costs more than a regular sit down dinner almost these days. It's crazy to me what we're seeing out there. And so I still think things are very, very expensive for people, for the average person. And so if our market was driven on a bread and butter type, people coming to be able to afford a home because our market was affordable, that's no longer going to happen. It's going to happen the same thing in rentals. And so people have to be able to afford where they live, or else we might seeing people leave Phoenix to go to more affordable places if we don't start seeing affordability come back. So that's kind of where I'm at for 2024. And if you're thinking about selling a house, I think that there's still such low inventory that right now, I'm not seeing a balloon of inventory. So if you're still thinking of selling a house, You have to be very careful about what you're going to list, your pricing for. I think that if you overprice your house right now, you're going to have a really bad experience. So you have to price within where the market is at. And I think that there's still opportunity to be able to sell your house and get top dollar for where the market is at right now. The market has been kind of slowly going down. So usually the spring is the best time to sell because we have the majority of home buyers usually purchase between January and June. So if you are thinking about listing your house, coming up is usually the best time of year to do it. So that's all I got for you guys. I hope you guys have a wonderful New Year's, and we will see you next year in 2024.